student loan delinquencies are exploding, and it's just the beginning.
The government can and will collect defaulted federal student loan debt by withholding money from borrowers, tax refunds, federal pensions, and even their wages.
So what does this mean? Plain English, it means the feds are going to start making people pay off their debt.
But this isn't just about student loans, it's a consumer collapse. Americans now have a record $18.2 trillion in household debt, with credit card balances sitting at over $1 trillion, auto loan delinquencies reaching their highest level in decades, and now, after a 4-year pause, student loans are back, and already 1 in 4 borrowers are drowning. The American consumer is officially maxed out. And while Wall Street might be celebrating market rallies based on speculation and easy money, real Americans are drowning under the weight of higher rates, higher payments, and shrinking breathing room. But this isn't just about missed payments. This is a system-wide warning that the foundation, that the consumer is crumbling, and when it gives way, it will impact everyone, not just those who are struggling with payments. It will ripple through jobs, credit, lending, trust in the system itself, all of which will make your life more expensive, unstable, and harder to plan for the future. So what happens when millions of Americans all can't pay their bills at once? If this is such a crisis, why is no one else talking about it? And most importantly, what can you do right now to stay ahead of what's coming next? Let's get into it. In case you missed it, student loan delinquencies surge back after a 5-year pause. Federal student loans were paused for nearly 4 years, starting in 2020, but once they resumed, missed payments weren't reported until now. This is our first real look at what's been going on underneath the surface, and it is shocking. According to the New York Fed, nearly 8% of all student loans are now delinquent, compared to less than 1% at this time last year. But the Fed isn't warning about missed payments. They are warning about consequences that are far more extreme. Let me explain. 5 million borrowers are already in default on their student loans, with another 4 million borrowers in some stage of late delinquency, meaning multiple months behind on their payments. That brings the total amount of borrowers in jeopardy to 1 in 4. 1 in 4 American student loan borrowers are now struggling to make their payments. The implications of this are massive. For anyone who's behind, credit scores could sink by as much as 171 points, according to the Fed's own estimate. That's enough for any borrower to wreck access to loans, to housing, even job opportunities. But I'm not going to get into whether you should be borrowing more debt if you already have debt, or the price of higher education, or the consequences of delinquency. Right now, what I want to focus on is the fact that there's now warnings for banks. American Banker put out an article yesterday that says soaring student loan delinquencies signal risk to banks. Why? Because it's not just federally backed loans that we have to worry about. When people fall behind on a large payment, and student loans are large. The average student loan payment, federal student loan payment in the United States today is $536 a month. When people fall behind on those payments, it's a good indicator that people also could be falling behind on credit cards, on auto, on rent, on mortgages, all types of other loans that are held by U.S. banks across the United States. In fact, in Q1 of this year, overall serious delinquency rates across all debt nearly doubled year over year. That is a significant spike. That is a warning signal that no one is talking about, that we need to. The headlines will just be telling us that the rate of inflation going up has slowed, but it's still going up. And we have not gained back our purchasing power that we lost. Americans are still feeling the pain of the last 5 years. In fact, of the last 100 years. But that's another story for another day. Right now, there's a reason that consumer sentiment is so low. The outlook on the economy and how consumers are feeling about their financial position is the lowest it's been since the Great Financial Crisis. In fact, it's about to overtake the fallout of the Great Financial Crisis. What does that tell you about how the average American is faring? Right now, 25% of citizens in the United States say that they fear that they can't afford basic necessities. Now, I am not going to get into a debate about whether you should or should not be taking on debt you can't afford. Obviously, you shouldn't be doing that. But that being said, There are a lot of people in this country right now who have been financing their lives. And I'm not talking about extravagant vacations. I'm talking about groceries, right? Buy now, pay later for groceries. That is borrowing from tomorrow to fund today. And if all of these credit scores start to tank and we see a situation where credit is tightening, what is going to happen to all of those Americans? Will the government be forced to step in and try and provide some kind of assistance? If that happens, where do you think they're going to get that funding from? We're already running a deficit. How much longer can this go on? It cannot go on forever. And in my opinion, if the government is forced to step in, we will be the ones paying for it. Right now, we have this unique situation where a lot of Americans have been helped out by the capital that they have in their homes. But even that is starting to crack. Foreclosures are slowly ticking back up. Now, in small numbers, I will say very small numbers, but a reason why it's so small is that home values have gone up significantly. So many sellers have been able to sell and walk away with a profit before any kind of foreclosures happen, but that might not be the case for much longer. In fact, right now we are seeing a widening gap between the asking price for a home and the sale price for a home, now sitting at about $40,000. That's not nothing. That's significant, especially at a time when home sales are slowing down. So what happens when one of the last foundational pieces holding up the consumer right now, the housing market, starts to slip? It hasn't happened yet, but it does seem as if we're heading that direction. And once it does, well, we're going to see the free market take hold. And of course, prices are going to come down. That's what happens. That's what happened during the Great Financial Crisis. And if that happens again, we are in serious trouble. But I know someone out there is going to ask, okay, if all of this is going on, why do things still seem so normal? How are things still running? Why hasn't the crash happened yet? But the key phrase here is on the surface. On the surface, things are plugging along. But underneath, it's like an iceberg. There are mountains of debt, right? We have all this consumer debt, and that's what the consumers are struggling and drowning in. If you are having to finance your groceries, we are in a serious problem, and that is what is going on today. This is what a slow motion collapse looks like, except now it's accelerating. If the foundation that we stand on is just paper promises, derivatives, hot air, speculation, nothing real, nothing tangible, then eventually, of course, that's not a solid foundation. It's going to crumble underneath us. But it won't matter if you've worked really hard, if you've been a great saver, if you have everything inside this system and the system crashes down, well, we're all going down together in the ship, which is why I personally make sure I'm protected outside of this system. Because if the consumer is the backbone of the American economy and this is the reality of what's happening with the consumer, well, then that backbone's not very strong, is it? No, it's sad. It's sad. And to be honest, again, I don't think this is going to get much better. I think it's only going to get worse. The warning signs are here. The question is, are you paying attention? If any of this concerns you, or you're looking at the future of where we're going and what's coming next, and you want to have someone help you get prepared with a strategy in place so that you can not only survive through what's coming next, but thrive, you can always talk to a member of our team. Really easy to call us at the number below or set up a time using the link in the description or scan our QR code. And as always, in the meantime, I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.